The Nifty scales a new record high of 26,310, while the Sensex powers past 86,000 as the S&P 500 in the index in the US resumes its AI rally. Morgan Stanley's emerging market strategist Jonathan Garner says India's valuations have turned attractive and he expects earnings growth to pick up next year. In a likely resolution of a long-pending issue, Tata Power is likely to ink a supplementary power purchase agreement with the Gujarat government for its Mundra unit and restart operations in December. This pact is likely to be used to ink power purchase agreements with other states as well. Shares of Whirlpool of India sink after its promoter sells nearly 11% equity after upsizing the offer from the initially indicated 7.5%. The sale results in the Indian arm ceasing to be a subsidiary as the parent stake slips to near 40%. Experts tell CNBC-TV18 that the government's incentive scheme for rare earth magnets is attracting high interest from foreign and domestic industry players. They, however, point out that this will entail importing some rare earths, even as efforts to explore local sources continue. And India winning the right to host the Commonwealth Games 2030 in Ahmedabad can spell a near 15,000 crore rupee development boom in the city area. Going by past records, infra, realty and hospitality players are likely to be the key beneficiary. The long-awaited day for the Bulls finally arrived today. You're watching Business Lunch. We're coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Hormus Fatakia. And after the Nifty and the Sensex both hitting record highs earlier in the day, there has been a slight cool-off, which is only par for the course after nearly 300-point up move yesterday, after a over 100-point up move in today's session as well. So some bit of profit booking coming in at higher levels. Of course, today being the Sensex monthly expiry as well, so that needs to be accounted for as well. So the bulls still ensuring that the Nifty remains in the green despite coming off the highs of the day. 26,310 is the record high. The Nifty Bank at one point had almost touched levels of 60,000, and that index too currently still around about that 59,800 mark. That is holding on to gains of around 300 points in today's session as well. So 59,870 the intraday high for the Nifty Bank, still trading around those record high levels is the banking index. But the pain though lies in the broader markets. The broader market breadth continued to struggle in yesterday's for the last few sessions, and today is no different. The mid-cap index has already moved into the red. The small cap index too is also off the highs of the day. So, and Nimesh also mentioned yesterday during his D-Street chatter that the participation in the broader markets was negligible, even though the indices were doing fairly well for themselves, and it was only a relief rally that was seen after oversold levels on those stocks. So the advanced decline currently at even Stevens as of now, but the declines have just about managed to overtake the advances. So that is the picture of the market currently, but it has taken 14 months for getting to those record high levels for the Nifty. Did happen in today's session, and you take a look at the bigger talking point. Of course, from the lows in April, the index is up 19%. That's the bigger talking point. When it comes to the contributors, of course, BEL, Eicher Motors, some of the top movers, Bajaj Finance, SBI, then gains of anywhere between 25 to around about 40 odd percent. Now, look at the underperformers. Trent, a street darling at one point of time, is halved. Bajaj Auto made a record high, or the same day that the Nifty made its record high, is down 30%. TCS is down 25%. NTPC is down 25%. So that is the picture among the losers on the index from September of last year. You take a look at the movers from April of this year from the lows, same names of BEL and Eicher Motors, but M&M, the post GST rally has been very substantial. Eternal has done well, Geo Financial has done well, but when it comes to the broader markets, that is the problem, and that has been the problem for the last few months. The mid-cap index from September of last year is up only 1%. The small-cap index is down 7%. You take a look at the losers in the mid-cap index. Of course, there have been gainers, but take a look at the losers. IndusInd Bank no longer in the Nifty, still down 40%. Colgate down 40%. Now look at Tata Tech, a recent listing, a much hyped IPO, down 40%. RVNL and IREDA, the two high-flying PSUs for all through 2023 and a better part of 2024, down 40%. The small-cap losers are painting an even worse picture. Tejas Networks, another Tata Group name, down 60%. Ola Electric down 60%. Whirlpool add another 11% to this 46% fall today. Brainbees is down 50%. Jindal Saw is down 55%. So this is only the top 5 names. The other list of losers will be even longer if you take a look at the smaller cap names. But today, the Nifty hitting record highs. The pain point, though, has continued to be the broader markets, and it has taken 14 months for the Nifty to hit to get back to levels to where it was in September of last year. And CNBC TV18 got the first global reaction from Jonathan Garner of Morgan Stanley. He told us exclusively that he remains overweight on India and doesn't believe that foreign investors are leaving the Indian markets. Listen.
Market starting to react to this with the idea that the policy stimulus that we've had in India is going to drive quite a meaningful upswing in nominal GDP growth, and earnings growth should accelerate from something like 7%, 8% to mid-teens next year. There is foreign investment participation in India on an ongoing and daily basis, and India's had a very vibrant IPO and secondary market. And it's a much wider range of investors that participate in the market than did in the past. So I wouldn't actually characterize it as being the case that foreigners have sort of been leaving the Indian market, or that something caused them to move out of this market in a major way this year. Going into next year, we are recommending quite tight market risk positions. So we do have an overweight India, but it's relatively small, and most of our other market calls are relatively contained. Overweight financials, consumer discretionaries, industrials. Those are actually calls that we're making generally across Asia. For example, if you were to look inside the Japanese market, we have much the same calls. We're underweight energy, materials, utilities, and healthcare in the Indian market. And so there are some quite pronounced sector relative calls there. I think for the energy sector generally, obviously it's more downstream in India than upstream, but it's a sector that is struggling as we go through an energy transition. And in the materials sector, we also have sort of a broad negative call on that outside of some very specialized areas like rare earths or gold miners and things of that nature. That's not very easy to access those kinds of names in the Indian market. You can find them in places like Australia, for example.
Jonathan Garner of Morgan Stanley, the first global exclusive reaction to CNBC TV18 as the Sensex and the Nifty hit record highs in today's session. Now, an over decade-long overhang is set to be lifted for Tata Power as one of India's largest ultra-mega power projects is set to resume operations after months of inactivity and after over a decade of uncertainty as well. Vivek is here with more on this. Vivek.
Well, that's right. So what we are picking up from our sources, Tata Power, the UMPP at Mundra, which is the ultra mega power plant, having 5 units of 800 megawatt each, almost 4,000 megawatt of power capacity, which currently is idle given the fact that Section 11 has not been extended since July this year, and also uncertainty over the supplementary as well as the full-time PPAs that the company was looking at. But what we are understanding from our sources is that all decks have been cleared, and plant is all set to resume operations. And this time around, we understand that Tata Power has got an in-principle approval from the Gujarat state government for going ahead and signing a supplementary PPA. This, remember, is a material development as far as Tata Power is concerned. Now, when we are talking about the other states, remember, Tata Power Mundra has 5 other states, or a total of 5 states where they have signed a PPA with. We understand that 4 states will actually go ahead and use Mundra as a precedent to go ahead and sign a PPA with Tata Power. Now, we reached out to Tata Power for this particular development. They are yet to respond to our queries. But what we have to understand is that the importance of Mundra cannot be underestimated. Remember, a total of almost 1,100 crore of PAT from Mundra as well as Indonesia is something that it contributed to a total PAT of around 6,000 crore in FY25. And it actually reported a loss in Q2 on the back of the fact that Mundra operations were stalled. So it's a material development. Under recovery, fixed cost under recovery will go away and will also contribute meaningfully to EBITDA.
Vivek, thank you for that update there. Now, in a big push to rare earth magnet manufacturing, the centre has announced a nearly 7,300 crore rupee outlay for rare earth magnet manufacturing. Now, this scheme aims to make India self-reliant and a key planner in global rare earths. The scheme also aims to strengthen India's automotive, defence and aerospace sectors. Currently, India imports all of its rare earth magnets. But Union Minister Ashwini Vaishnav said that India must become self-reliant in rare earth magnets in the next 4 to 5 years. Listen in to what two big mining giants in India, IREL and IMFA, had to say about this opportunity.
India is the third largest resource for this rare earth ore. So currently we are having 8.35 million ton of rare earth. So for this, but this is lighter rare earth. So lighter rare earth, particularly NdPr we are having, but we require dysprosium and terbium, which are required for the this coercivity or to have this high resonance, which allows the retain high magnetization and the coercivity in the magnet. Right now, this dysprosium and terbium has to be imported. And on top of that, there are technology available like Protorial and this VAC of Germany. They are having this technology of making rare earth magnets without using the dysprosium and terbium.
We, of course, have decades of experience in mining, in processing of ores, etc. Now, I do recognize this is a different cup of tea. Conceptually, it may be similar, but it is a different cup of tea. But inherently, I would say that we are amongst the few who understand it off the bat. And it's a question of going out and evaluating the details when the scheme is out in the public domain, as it is at the moment, going through the details and looking at what is there on offer. But off the cuff, I would certainly say that it is a great opportunity. It is something that we would certainly want to evaluate and see that how it fits in to our own sort of capabilities and strategic ambitions.
Take a short break, but just before we do that, here's a quick programming note. If you are looking for the big bets and market themes for 2026, CNBC TV 18 Access gives you direct access to White Oak Capital AMC's Ashish Somaya and Prashant Khemka as they share their winning market themes and actionable investment strategies. Ask your questions live on the 28th of November at 1:30 p.m. Become a member today on the CNBC TV 18 app or log on to cnbctv18.com/access/plans. Welcome back. Now, the city of Ahmedabad has won the bid to host the Commonwealth Games in 2030. And Sonal is here to tell us this massive infra opportunity that lies ahead.
Well, yes, the announcement that Ahmedabad will host the 2030 Commonwealth Games could open up one of the biggest real estate and infrastructure opportunity cycles the city has ever seen. Large sporting events don't just bring athletes and spectators, right? They trigger a wave of construction, urban development, hotel expansion, and long-term demand for residential, retail, and commercial real estate as well. So let's break down where the biggest opportunities lie and which kinds of companies stand to benefit the most. But first up, let's just look at the costs that have been incurred in previous Commonwealth Games. The numbers are for you on the screen. Manchester, Melbourne, Glasgow, Gold Coast, Birmingham, somewhere between 10,000 to 15,000 crore rupees is the opportunity which is available. Now, sectoral impact. First, real estate developers. The biggest near-term opportunity sits with developers holding land around key games avenues, the athlete village and transport corridors connecting them to the airport and the city centre. Hosting the games means new world-class sports facilities, upgraded highways, metro links and also an expanded airport. All of this sharply improves connectivity and land value and adjoining micro markets. Developers with large integrated townships, mixed-use developments or upcoming residential projects in and around Ahmedabad and Gandhinagar could see accelerated demand as investors and home buyers they look to participate in the growth story. Some of the big real estate players in Ahmedabad include Adani Realty, Arvind Smart Spaces, Godrej Properties, to name a few. There could be some opportunity in the airport link development as well because of improved international connectivity, plus terminal expansions increase inbound travel, hotel demand, premium office or retail near airport as well. Of course, Adani airports will be in focus because of that. Construction and engineering contractors, they'll also be in focus due to venue construction, road, metro, airport works and hospitality projects. So the likes of L&T, HCC, GMR and any other regional large contractors and players will be in focus. These firms historically won major game contracts in Delhi and elsewhere as well. Hospitality industry, of course, will be in focus. There'll be surge in visitor nights for the games and longer-term business travel. It will lift revenue per room for these companies, per available room, that is. There is a new ITC hotel there as well. So stocks like ITC hotels, Indian hotels, etc. will be in focus on the back of this. But of course, the key to track now will be formal project announcements and tender awards from Gujarat or state government and the organizing committee as well. But this definitely could be a big boost to a lot of industries.
The big infrastructure boost lies ahead in Ahmedabad. Sonal, thank you for that update there. Moving on, a big launch from Mahindra's Born EV SUV platform. The company introduced the XEV 9S, a 7-seater SUV aimed at the mass market, which is priced at 19.95 lakh rupees. The car was unveiled at Mahindra's Scream Electric event, where it is celebrating 1 year of its Born EV platform. Let's now listen in to Rajesh Jejurikar, the ED and CEO of the auto and farm equipment sector, who spoke to Shireen Bhan at the M&M Town Hall about the company's EV plans.
We have believed, Shireen, that the EV portfolio has a lot of learning, and we have to calibrate the organization learning as you're building a category. And the last 6 months has been, and which is the reason why, even though we were ready with some of the other products, we decided to phase it out so that we build learning in the channel, the back end of the organization, quality, software, all of that. And I think we are at a stage where we're ready to ramp up, and hopefully Jan onwards we should see the numbers go up. And that's how we had planned it, which is why when we announced the first two, we had said the initial capacity we are operationalizing is about 4,000 to 5,000 a month.
Take a short break here on Business Lunch. More news and updates follow on the other side. Boy, the markets have taken a bit of a nosedive in the last few minutes now. 150 points off the highs of the day. The index, the Nifty, is now down 50 points. Now well below the 26,200 mark and heading towards 26,100 now on the downside. The Sensex has also corrected 500 points. Both of them hit record highs earlier in the day. But the pain, as we mentioned earlier as well, is in the broader markets. The midcap index now is down 350 points from the highs of the day. The small cap index is now down 0.7%, already down 180 points from the day's high, and leading the move downwards are the banking names. The Nifty Bank has seen this sharp one-way move down from the intraday highs, and we had earlier started off the show when the index was near levels of 59,800, and now the index is down almost 300 points from those levels within a matter of minutes. And of course, we need to account for the fact that this is the Sensex monthly expiry that we are talking about. But the Nifty now below the mark of 26,150, almost 160 points off the highs of the day. And leading the index down are names like Reliance Industries, that's down 0.7%. Bharti Airtel is down 1%. That's the top contributor to the Nifty downside. TCS has taken a dive as well on the downside, now 1% lower on TCS. That stock too seeing a significant correction from the highs of the day. SBI, among the PSU banks, the PSU bank index is the worst performing index so far in the trading session, was down earlier in the day, continues to remain lower as well. The recovery in SBI has been sold into, as is the case in the PSU bank index as well, and is reflecting there. And Maruti is the other one that is leading the index down as well, 1.5% lower now on Maruti, move down in the last few minutes as well. But Whirlpool continues to remain at the lowest point of the day, 11% lower, as you can see at the bottom of your screens. But the picture right now, the Nifty down 60 points. It's a 160 point correction from the highs of the day after hitting record highs. Some profit booking setting in on the monthly expiry of the Sensex contracts. Take your leave on this edition of Business Lunch from me and the team. Thank you so much for watching. Midcap Radar on the other side.